Hey everyone, I'm Leanne Pilkington back with you for the latest edition of the Laing+Simmons Partners webinars, and I've got Eliza from CoreLogic. Hello.
Hi, thanks for having me.
Hey, nice to see you in the flesh. I usually see you on the TV.
Oh, yeah.
So the age-old question, what's happening in the Sydney real estate market right now?
Well, I think Sydney has been through a bit of a roller coaster over the past few years with all the extremities of COVID and interest rate movements. But now I'd characterise it as more slow and steady performance.
Yeah.
In the March quarter, we saw, from a value perspective, home values were up around 1% in March. But that's a little bit slower from a quarterly growth peak in June last year, where it was running at 5.5%.
Yeah, that's a big number, isn't it? And interest rates are going up at the same time.
Exactly.
Nuts, right?
Yeah.
The prices are going up at the same time as interest rates.
Yeah, so I think, from a price perspective, but also looking at things like sales volumes, which are very close to historic averages, about 19,000 in the March quarter as well.
Is that right? Because you speak to any real estate agent, and clearly I speak to a lot of them, and they'll tell you that stock levels are really low. So that's not the case. It's around average.
The number of new listings, so the number of vendors who are kind of coming to market, that's pretty close to historic averages.
Yep.
But because there's a lot of sales still happening, eating up a lot of stock, and that's why your overall stock levels are quite low. So from that perspective, it's an extremely resilient market in the face of higher interest rates and more uncertain economic conditions. I think in the past few weeks, we've heard more news around stubborn inflation and a really tight labour market that's going to throw off the certainty of the trajectory for interest rates.
Yes.
And that puts more uncertainty into the trajectory for the Sydney housing market as well.
Yeah, it's interesting because we were hearing that interest rates will be going down in 2024, maybe once, twice, maybe even three times. And then all of a sudden, someone came out just recently saying, oh no, the next movement could be up. So what's the CoreLogic view on that?
Well, the narrative of where interest rates are going, it kind of turns on a dime.
Doesn't it what?
Depending on what data is coming out.
Yeah.
And unfortunately, the latest two data prints for unemployment, inflation, showed that unemployment was still really low. The labour market's really tight. And that means people are still able to spend quite a bit of money.
Right.
That was also kind of reflected in the inflation data, which annually is trending lower, but did tick up a little in the past quarter. So that's where the uncertainty is coming from. And now I'd say you've got a range of predictions from the bank economists, from your CBA, NAB, are still predicting that the first rate cut could occur this year. But then you've got some of the smaller bank economists saying that actually the first rate cut won't be until 2025. And even some saying we could see increases this year. So
and so me being cynical, do you think that people come out and make these dramatic predictions like it's going to go up, not down, so that they get some publicity that the big banks usually get?
I think it does get them a little bit of media attention. But that's the thing about trying to weigh up the economic landscape as well, is you're always going to get a lot of different opinions. Consensus from the major banks still seems to be an easing in monetary policy either towards the end of this year or early next year. But either way, look how resilient the housing market has been. I think a lot of people, particularly those who aren't as reliant on taking out a mortgage, are still interested in the market and looking at their long-term perspective on real estate.
Yeah, absolutely. And there's correct me if I'm wrong, it's about a third of people don't have a mortgage. Is that right?
Yeah, that's right. So about a third of households are owner-occupiers without a mortgage. And
that's a big percentage of the market, right?
Not to mention from, a downsizing perspective, that's a wave of buyers that potentially wouldn't have to go back into debt.
Yeah, absolutely. So during COVID, we know lots of people moved out of Sydney to regions, to the beaches, even interstate. Are we seeing people moving back from the regions?
Yeah, so the net migration from Sydney to regional New South Wales, it's common for that to be negative for Sydney, which basically means that you often see more people leaving Sydney for regional New South Wales. That's still the case, but it's certainly calmed down since the height of COVID.
Yep.
So in the September quarter last year, which is where we have the latest data for, we saw about 8,500 Sydney-siders left Sydney for regional New South Wales.
Yep.
But that's down from, say, the December 2020 quarter, where it was 13,000 people Sydney for regional New South Wales. So if you like, kind of like what we're seeing with market dynamics across Sydney, it's kind of normalising the further we get from COVID lockdowns.
Yeah.
And the added benefit that we see for the Sydney market now is that we've always made up for population growth through overseas arrivals.
Yeah.
So that bounced back very strongly once international travel was reinstated.
Yep.
And in the last financial year, Sydney added 156,000 people to its population from overseas arrivals.
Right. And is that normal pre-COVID, or it's up on the pre-COVID numbers?
It is at record highs.
Yeah, right.
It's much higher than what we were seeing pre-COVID. But part of that is because we had less temporary migrants, so international students, say, didn't come through the COVID period.
Yep.
By now, they would be leaving.
Yeah.
Instead, we've had people who haven't really left because they've arrived more recently, and we've had a lot of catch-up in migration post-COVID as well.
Yeah.
So if you like, it is a temporary high that is expected to normalise next financial year.
Okay. Yeah, interesting. It all puts a lot of pressure on the housing market, though, doesn't it?
Well, yes, and rentals in particular, because 60 to 70% of recent overseas arrivals are renters when they first come to Australia.
60 to 70%. I thought it would actually be higher than that.
It might be at the moment.
Yeah.
So many migrants coming in, a temporary student, things like that.
Yeah.
But yeah, you'll find for people who move to Australia with the intention of staying here, they might even look to buy their property first
before they get here.
Before coming over.
Yeah, right. Interesting. And so what's your view on what's going to kind of happen next in the market?
I think Sydney's housing market might be tested in the near term because we've got this coinciding of softer economic performance and higher unemployment is expected.
And so the unemployment numbers are expected to increase?
That's right, yeah. So the unemployment rate is expected to rise, and that, in a way, that's what the RBA wants, right? They want economic conditions to slow down so we contain our spending and we get less inflation in the economy.
Yeah.
But that means that less people will be capable of saving up as much money for a deposit or getting a job to service their mortgage. So that does factor into housing demand a little.
Yeah.
Ultimately, though, I've always seen Sydney as one with strong population growth, particularly from the international perspective.
Yeah.
It's a very desirable market with a diverse economic base.
Yeah.
So long term, and I think especially when we do start to see interest rates come down, that will bode well for the Sydney market.
Yeah, I think you can, as they always say, the best time to buy property in Sydney was sort of 40 years ago, and the second best time is today, right? You sort of buy when you can afford it, and the market will take care of the rest. There's been a lot of conversations around recession. Many countries around the world are in recession. Australia, we've been teetering on the edge. What is the view? Will we manage to stay out of recession, do you think?
Look, to be honest, there is probably rising risk of recession.
Yep.
Australia's quarterly GDP growth, where recession is that 2 consecutive quarters of decline in GDP. And our quarterly GDP growth has been fading for the past 5 quarters consecutively.
Okay.
The latest result was growth of just 0.2%.
Okay.
So we're getting very close.
We're getting right on the edge.
And I think with the outlook for inflation and interest rates, that's possibly increased the risk of recession a little more.
Yeah.
But again, funnily enough, the housing market doesn't always behave in tandem with GDP growth.
Yeah.
Especially if a recession means interest rates start to come down, that would presumably increase demand for credit, and then that would in turn fuel prices.
It's very complicated.
It's very complicated. We try and simplify it where we can. But I think, like you say, you can think about it simply as well.
Yeah.
You know, when you have the opportunity to get into the market, it can be really good to do so.
Yeah.
At least looking at historic performance in the housing market, it's been incredibly resilient to negative economic shocks.
Yeah. And other states, I hear that South Australia and Western Australia in particular are moving very strongly. And is that partly fueled by investors leaving some of the eastern states to get better yields and cheaper prices?
No doubt. I mean, we don't know exactly who buys what in the different cities, but you're exactly right in that Perth and Adelaide are markets where growth in home values is running at more than 1% a month. You know, you think of Sydney rising 1% in the quarter.
Yeah.
Perth home values were up almost 6% in the March quarter.
Yeah. Coming from a lower base than Sydney, though, right?
Exactly right. So both cities, Adelaide and Perth, are coming from a very low base.
Yeah.
They've also seen more favourable trends in terms of internal migration.
Yeah.
So more people going to the States than leaving WA and South Australia. And I think from that affordability perspective, they're more manageable, particularly for investors under a higher interest rate environment.
Yeah. And Queensland, everyone was moving out of Victoria and into Queensland. Has that sort of slowed down or it's still happening?
It's still happening, but I'd say the dynamic in the submarkets have changed a little bit.
Yeah.
So initially, Gold Coast and Sunshine Coast were some of the fastest growing, very popular markets.
Yep.
Now it's probably more your Logan, Beaudesert and cheaper areas of the Brisbane metropolitan that is seeing very fast growth, both in terms of housing values and population.
Yeah.
To be honest, we're seeing kind of a similar dynamic in Sydney, where parts of the inner south of Sydney, the eastern suburbs south, they're not inherently affordable markets, but I think they're relatively low price to some of the North Sydney higher end.
Yeah.
Those are the opportunities that people are really looking for, where interest rates are.
Yeah.
Where can we get a relatively good value price point that we know is going to deliver long-term capital growth?
Yeah, because that's what it's all about. Yeah. And the poor old Victorians, how are they faring? I know a lot of investors are leaving the market for a variety of reasons down there.
Yeah, so as a portion of all investment for housing finance across Australia, the state of Victoria has seen its lowest level in about 8 years.
Wow.
So the overall market in Melbourne continues to see a decline. We've got values down again for the month of April, and it is a softer market for sure. But I guess the flip side of that too is that for prospective home buyers, certainly locally, better buying conditions for them.
Yeah, whenever there's challenges like that, there's lots of opportunity for people,
That's right.
Beautiful. Thank you so much for taking the time to be here. I always love catching up.
Thanks again for having me. It's been great.
Pleasure.